Ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm going to take a quick look at some of the currencies the markets are in very volatile situation after higher than expected JOLTs data and then Bank of Japan intervention, or so it seems. So let's start by taking a look at the dollar versus yen. That currency pair spiked above the 150 level, moving up to about the 150.15 level after the JOLTS job data. And apparently it didn't sit well with the Bank of Japan as they came in and intervened, or so it seems, and the price moved sharply to the downside. The low price that came in was right above the low price going back to September 21 near the 147.31 level. That's down here. And then we started to see a rotation back to the upside. The price moved back in between the 100 and 200 hour moving averages. That's the blue and green lines here. But as you can see, the price is currently just below the 200 hour moving average at 149. Even nice little round number there. Currently trading at 148.91 or thereabouts. Maybe a little bit higher now at 93. See if the price can stay below the 200 hour moving average from a technical perspective. Sometimes traders look at that level. Recall from last Friday, the price low came in right against that 200 hour moving average and bounced to the upside rather sharply. So this level is going to be important. What was once support now becomes resistance. We'll see. 149.00 is that level. Let's take a look at the euro versus US dollar next, and if we the price action off the JOLTs sent the price to yet another new low at 104.489. But as you can see, the price has rebounded back to the upside. Now the high though has been able to stay below the 1.0483 level right here. And that is a key support resistance level now for the euro versus US dollar. If we go to the daily chart and look at this area right through here, we've outlined this level a number of different times, and that is the low of the swing area going back in time to this November and December and January, and even here in March. Area between 1.0483 and 1.0533. It'll take a move back above the 104.83 level to kickstart perhaps even more short covering in this pair. But as long as we stay below that level, and so far we are, we would the sellers would be more in control. The dollar buyers would be still in control for that currency pair. Let's take a look at the sterling versus US dollar. And if we look at this, the low price after the JOLTS job data came down to test the low price from earlier in the day at 1.20515. The price has since bounced higher. But what is important for this currency pair is to get above last week's low. That low came in near this 121.109 level, and as you can see, the high price off of the rebound here off the low has stayed below the high for the day, and certainly below the 121.10 level. A move above that level would be needed to give the buyers some confidence. Absent that, and the sellers are still in control. So watch the 121.10 level in the sterling versus US dollar. The Aussie versus US dollar is moving lower or moved lower after the data as well to 0.62869 on the dollar buying, but it too has seen a bounce higher. Reserve Bank of Australia kept rates unchanged, and that helped to well, the market was moving down even before then, but it pushed the price below the low price that we saw last week near the 0.63315. We've been down now 1, 2, 3 strong days to the downside here for the Aussie versus US dollar. I would take a move back above the 0.6331 level, and note here how the high price, the high corrective price after the initial move to the downside stalled against this low right here. So getting above that level is key going forward. Absent that, and the sellers remain more in control in the Aussie versus US dollar. Finally, let's take a look at the dollar versus Swiss franc. And this currency pair moved higher after the CPI data in Switzerland came out today. Weaker than expectations. If I put a Fibonacci on the last move higher for this currency pair, we did move higher off of the JOLTS data up to 92.42. We since moved back below the high price from last week, and we'll look toward the 38.2% retracement of this last move to the upside at 0.9185 for potential support. If we get below that level, the 100-hour moving average at 0.9170 would be targeted. Taking a look at the daily chart for this pair, what is that may keep a lid on this pair now is that when the price moved above moved to the new highs The price did get above these swing highs going back in time to this month in March. These were swing highs all coming in near the 0.9220 level, and in last month the high price also stalled near that level as well. So getting above that 0.9224 level should have sent the price higher. We are back below that level, and so watch 0.9224 on the top side for resistance. If it stays below that level, maybe the sellers start to come in. We would need a move below the 38.2% retracement at 0.91615 to give the sellers more confidence on the downside. So there you have it. A look at some of the major currency pairs. By the way, the yields, the 10-year yield is now up 6 basis points at 4.743%. The 30-year is up 7.8 basis points at 4.872%. Those yields are getting closer and closer to the 5% level that maybe traders are eyeing. The 2-year yield is now up 1.5 basis points. And finally, looking at the U.S. stocks, they are getting hit with the Dow Industrial Average now trading down minus 303 points or 0.9%. The S&P is down 1.1%, and the NASDAQ index is down 1.38%. So there's a run through a lot of the markets. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.